Welcome to Money Chat Now. I am your host, Larry Steinhouse, and today is Friday, August 20th, 2021. I want to let you know that Money Chat Now is brought to you by Investor Schooling. Hey, go to investorschooling.com and you can take a complimentary class this Thursday, learn about stock market, learn about stock options, learn about real estate, and learn about how to make more money. Today we're going to be discussing how the Dow is actually up today. We're going to be talking about upcoming Fed symposium. We're going to be talking about how the Fed stimulates the economy. We're going to be talking about American Airlines extends its alcohol ban, the infrastructure vote next week, and Coinbase 500 million crypto buy. So check this out, right? So you see where it says Dow drops again, but it's holding up, and we put that on our sheet or the the slide next to me right there, right? So here's what's going on with the Dow. The Dow is really getting into one of those points where it's really bugging me. It rises about 275 points today, and it's down for the week. So if you remember, on Monday we hit a record, on Tuesday we hit a record, last Friday we hit a record, blah, 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 record. And every time it goes down, we talk about buying on the dip, right? Buying on the dip. The question is, which blah, blah, blah dip do we need to buy it on? Because it's starting to really piss me off. Because every time my stocks dip, I end up dipping, dropping, losing money. So yeah, the Dow's on the rise today, or the Dow's up today, but unfortunately, most of my stocks, now, at the same time, I'm not that worried about it, because most of my stocks are still in recovery plays, like CCL, RCL, and AAL are all recovery stocks. I'm going to do very well with them as soon as the world recovers and as soon as the famed Delta variant decides to stop being in the news. Guess when it's going to stop? When it stops being in the news, then things will start coming back. All right. I want to talk a little bit about the Fed officials gathering in Jackson Hole, Wyoming this week and what that means. The Fed officials gather for their annual symposium in Jackson Hole, Wyoming, in this coming week, and the hot topic will be the intention of many Fed's officials to move away from the easy monetary policy. The Fed could keep tensions in markets running high after stocks reacted negatively to the Fed minutes that said most members support slowing down bond purchases this year. All right, I'm going to talk about this, and I'm going to talk about how the Fed actually works. But here's what's going on. So they're all going to go there, they're going to meet, they're going to take a vote, and they're going to say, hey, should we slow down bond buying? I'm going to explain what that means in a minute, but what that essentially means, if they slow down bond buying, basically, the Fed's not trying to stimulate the economy anymore. Personally, the Fed doesn't need to stimulate the economy anymore. We're done. Enough. It's fine. We should, and I mean this, we should have stopped stimulating the economy when Obama was president. So we kept stimulating the economy, then COVID happens, and of course, oh no, we can't stop stimulating the economy now, because if we stop stimulating the economy now, we're going to go into a recession or a depression. And that's absolutely true, but that's the reason why we should have stopped stimulating the economy when Obama was president, because now we're stuck extending this problem, and because this problem got extended so far, we know what's going to come next, which is massive inflation. We've seen it. It's going to happen. It is just the way it is. Look, if you want to sit there and blame President Biden, you want to blame President Trump, you want to blame President Obama, it doesn't really matter. What's going to matter to you is everything that you now want to buy is going to cost you more, because this wasn't done 10 years ago. Literally 10 years ago this should have been done, or maybe even 8 years ago it should have been done, but whatever it is, it should have been done, and it wasn't done, and that's why we have a problem right now of this massive inflation that's about to happen. Now, at the same time, massive inflation also brings wages up, so it kind of doesn't matter. I mean, there's always that discussion of, hey, do we want $15 an hour wages? And the answer is, well, that's not fair. They get $15 an hour. It doesn't really matter, because when a gallon of milk is now $7 instead of $5, then it doesn't really matter if it's $15. I mean, we've seen gas prices go up. And you know that, basically minimum wage of $15 an hour would now be 2 gallons of gas. Well, not that bad, but that's what's going to happen. So it doesn't really matter. It's just money's going to go up, inflation is going to go up. But let's talk a little bit about how the Fed actually works. So the most effective tool the Fed has, and the one it uses most often, is the buying and selling of government securities in its open market operations. Government securities including treasury bonds, notes, and bills. The Fed buys securities when it wants to increase the flow of money and and credit and sell securities when it wants to reduce the flow. So this is something like when companies buy back their own stock. So we talked about yesterday, we talked about Macy's, and Macy's having a fantastic report the other day, and Macy's said that they're going to be buying back their stock. And this is great because if they're buying back their stock, then obviously the stock goes up. So the Fed purchases securities from a bank, or actually the bank, or the banks, or whatever, and pays for the securities by adding a credit to the bank's reserve. So basically what happens is they don't even give them money. They just give them a credit. So when they talk about printing money, this is what it means. This increases the amount of money in the banking system and lowers the federal funds rate. This ultimately stimulates the economy by increasing business and consumer spending because banks have more money to lend and interest rates are lowered. All right, this is where, if you know me, you know that I am a big fan of get all the credit you can when you can. Right now, is probably the ending, not end, but ending of getting all the credit you can. What that means is pretty soon you're not going to be able to get credit as easily as you could now. So if you're a bank and you're getting these credits, and then you need to basically give this money to consumers. So how do you give this money to consumers? You give it through credit cards, you give it through bank loans, you give it through HELOCs, you give it through new loans, new mortgage loans. That's how you give it to the consumer. That's how you make money. So if you make money, in order for you to make money, you have to do this. That's why you're getting, right now, you're getting in the mail, you're getting more credit card invitations than you've ever gotten before. Because of this, you want to start applying for them and getting them, because soon you're not going to be able to get them. One of the greatest lessons I've ever learned from one of my mentors is get as much credit as you can when you can, because when you need it, you can't get it. When you don't need it, you can get it. So get it. All right, these decisions are made, by the way, they're made by the Federal Open Market Committee, whether they should be increasing money supply or not. That consists of 7 members of the Board of Governors, the President of the Federal Reserve Bank of New York, and 4 rotating members from the other 11 reserve banks. And basically what's going to happen is they're going to meet next week, and we're going to find out what happens. It's pretty obvious what's going to happen. They are obviously going to slow down buying bonds, and they're going to slow down giving this credit to the banks. They have to. They just have to. They should have done it a long time ago, so they're going to have to do it now. What that means basically is the stock market's going to take a really bad hit next week when this happens, and then, as we all know, the stock market has a short memory, and it's not going to care. By the way, next week we also have housing data as a highlight of the week, along with earning reports from other people like HP, Dell, Best Buy, and others. All right, let's take a quick commercial, and we're going to come back.
Okay, so you've thought about investing in real estate, houses, apartment buildings, properties, but don't really know where to start? Well, what if you could very easily learn how to gain strategies to use other people's money to buy and sell houses in the Philadelphia area? If you could learn and network with successful area real estate investors and how to produce monthly income on rental properties without headaches, that place is Investor Schooling. With Investor Schooling, you'll learn from 2 Philadelphia area rockstar real estate investors, Phil Falcone and Larry Steinhouse, about how to buy and sell properties the easy way and teach you basic and advanced techniques to help you make money in real estate. You can attend Investor Schooling in person or online visual classes 8 times a month. You can and will learn how to make money in real estate. Call for free information and get a complimentary pass to one of these classes. But don't delay, as these complimentary passes are limited. Call the number on your screen now or visit investorschooling.com. investorschooling.com.
All right, welcome back to Money Chat Now. I am your host, Larry Steinhouse. We've been discussing how the Dow actually went up today. It rose about a little less than 275 points, which was pretty nice, but it was still down for the week. We talked about the upcoming Fed symposium and what that means, and we're going to see next week. I think there's going to be a little rockiness in the stock market next week because of this. We also talked about how the Fed actually works and how they actually stimulate the economy. Let's talk a little bit about American Airlines, which happens to be one of my favorite stocks. I own some of it. And here's, as you know, this week, the absolutely brilliant government has decided to extend the mask mandate on flight travel. Because, the only place apparently you can get COVID right now is on an airplane or on a train. So these are the only places you can get COVID. So since the only place you can get COVID, obviously we need to have masks on trains and planes. Right? There you go. And obviously trains, planes, and automobiles, because obviously if you've seen a lot of people with masks on driving their automobile, it's trains, planes, and automobiles that you have to wear a mask on. Anyway, so American and Southwest said that they were going to hold off on resuming alcohol sales on board as an effort to curb unruly traveler behavior. So these unruly travelers, and this is why I'm not traveling on an airplane, are getting drunk and cursing out the wait stewardess, stewards, whatever they are, on the planes because of the masks, because they're taking off their masks and they're saying, you can't make me wear a mask, blah, 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 and they're getting a little anxious. All right. Americans said it won't sell alcohol on board till at least January 18th after the federal mask mandate for airplanes and other modes of transportation was extended to. American said it's working with FAA to stop sales of to-go alcoholic beverages in its hubs at Dallas, Fort Worth, and Charlotte, North Carolina. So now they're even telling the airports that they can't sell alcohol either. Oh, it just goes on and on and on. The Federal Aviation Administration on Thursday said it had proposed fines of more than $530,000 against 34 travelers for alleged unruly behavior, bringing this year's total fines up to $1 million. Wow. It just amazes me that the obvious solution is to let people be adults. So if you treat them like children, they're going to act like children. That should be a lesson to the people out there. Let's talk a little bit about what's going to happen next, the infrastructure bill. So the House returns to Washington next week to forge ahead with its massive infrastructure agenda. The chamber aims to hold a vote to advance the bipartisan infrastructure bill, Democrats' $3.5 trillion spending plan, and voting rights legislation, followed by the passage of a budget resolution that unlocks the reconciliation process. So not only in this bill, I mean, you see the voting rights legislation. I mean, we have voting rights. The real issue here is, are we going to ask for voter ID? And my guess, and I haven't looked into this yet, but my guess is this is going to make sure that that no one can ever ask for voter ID, because you need ID for everything except for voting, whatever. But they're packaging it into the $3.5 trillion spending plan, and they're going to get this passed. There's no doubt. So because this is going to get passed, this is something good for people who are investors. So concrete and other materials are on the rise and expected to flourish after the infrastructure bill is passed. U.S. concrete stock more than doubled compared to last year. The industry also faces labor shortages of skilled workers and truck drivers, and the recent housing boom means more demand for concrete and cement, putting more pressure on industry to increase capacity. Look, you want to talk about the economy rocking? This is going to make the economy rock. I realize that it's going to have super repercussions in the future, but if in the next 2 to 3 years, the economy is probably going to rock because of the infrastructure bill. Because we're going to have really, really low unemployment because people are going to need jobs. They need to build things. They need to be making materials. Here's the interesting part too. The more educated, in other words, the people who go to college and spend more money on college and try to get jobs that demand the kind of money that they're demanding, are not going to get that kind of demand. The real demand is going to go to the laborer. So believe it or not, the laborer is going to probably end up making more money than the PhD. And watch this, and you'll actually, obviously we can't play this 3 years from now, or we could if we remember to, but you'll actually see this is what's going to happen. The laborer is going to make more money. So basically, don't bother. All right, let's talk about Coinbase buying crypto. So we all know Coinbase is a great company. It's a company that does crypto trading, and you can go to Coinbase. You can hold your crypto on Coinbase. You can buy crypto on Coinbase. And be honest with you, I'm using Coinbase. I have a couple of things. I have Ethereum, and I have Dogecoin, because I just bought it honestly for fun. People come into our school, investor schooling, and they ask me all the time about things like crypto. And I don't know much about it, and we keep saying we're going to talk about it, we're going to learn about it, but I decided to buy some just because I know if you buy it and it goes up, I could sell it. That's pretty much what I know. So I bought a bunch of Ethereum, I bought a bunch of Dogecoin just for fun. I'm up 25%, who cares? But the reality is, these guys think this is gonna blow out of the water. So CEO Brian Armstrong said that he hopes to operate more of the company's operations using crypto, right? So basically, he's gonna. I bet you I wouldn't be surprised if he starts paying payroll in crypto. That's how cool that would be. The company plans to invest in Ethereum, proof of stake assets, DeFi tokens, and many other crypto assets supported for trading on our platform. So now think about that, right? So I told you I bought Ethereum. Now I noticed Ethereum is up recently. My guess is this is a good reason for it. My also suggestion, if you are a crypto person or if you like to buy stuff on news, Ethereum is probably a good play for you right now, but don't put too much money into it. Just put in money that you could afford to go to zero if you had to. All right, so Coinbase will buy 500,000 crypto on its balance sheet and allocate 10% of its quarterly profits into a crypto assets portfolio. Company executives announced late Thursday. So that means now they're going to have a portfolio, which I wouldn't be surprised turns into an ETF very shortly. The price of Bitcoin climbed higher on the news, passing 47,000 on Friday after sitting below 45,000 the 2 previous days. Coinbase shares rose more than 3% higher early trading Friday. So Coinbase actually has gone up over 22 points from its low yesterday. And that was one that I missed, and I'm crying about it. Anyway, I'm going to talk to you about how you can possibly make some money. You could always sell this item and buy some crypto with it. So we're going to talk about how you can win Phil's car.
Hey, if you were listening to Investor Schooling Live today, I'm Phil Falcone, and I made the decision today on air that I'm going to be giving away this car. You want to take a look at it? Let's do it. How would you like to pop your top without ever getting out of the car, huh? It's pretty cool. You can do it at a red light. You can do it when you see it rainy. You can actually even do it when you're driving, as long as you don't go maybe faster than 10 miles an hour. So I am giving away this car. Why? Is it because I'm crazy? Is it because I'm rich? Is it because of both? Take your pick. I don't care. Let me tell you about the car. We're going to have a contest. We're looking for real estate investors to go to our website and give us a real estate tip. And you can have people that you know vote on the site about which real estate tip is the most quality, most valuable to them. So let's just say that our contest is going to be looking for quality real estate tips and for votes. So you need to get your friends, your family, people who care about you, and real estate investors who are willing to go on the site and vote for it. And I will give you this car.
Welcome back to Money Chat Now. I am your host, Larry Steinhouse, and we had some fun today. We talked about how the fact the Dow is up. We talked about the upcoming Fed symposium. We even talked about how the Fed stimulates the economy. Go back and rewind that and take a look at that. We also talked about American Airlines extending their alcohol ban because they're afraid that people, anti-maskers, are going to complain. We talked about the infrastructure vote, and once again how Coinbase bought $500 million in cryptocurrency to hold in account. All right, I want to talk real quick about some stocks that I have, some stocks that I think are good plays. By the way, Apple is still a play. I believe Apple's a great play. I believe the stock is a great stock. First of all, it's got a dividend, so it's a great stock to hold on to. You might even want to sell some covered calls on it if you want, because it's going to go. I think it's going to blow past 150 shortly. We had a little bit of a pullback this week. That's fine. Robinhood also pulled back today. I think Robinhood, let me just see real quick where it closed. It closed at $42.70. It closed down. It closed down to $2. I think Robinhood's going to bounce back. I also think that at below 40 is another buy. So if you want to average your buy at below 40, I would do that. And again, at below 35, if it does it after that as well. Coinbase, we talked about that before. I missed that play. I'm so upset. That was some jump since yesterday. That Coinbase actually. Let's see. Coinbase finished at 257, and I had a buy at 240, and I let it go because I didn't have the money to buy it because I was already all in. I'm gonna go cry. All right, sorry. CCL, AAL. Look, basically this week we had the mask extension. So people are like, oh man, the mask extension. So they're like me, they're all feeling the same way. But that's going to go away in a couple of days where, like I said, Wall Street forgets quickly. My options, I have options on American Airlines, I have options on CCL, and my options are out till February. So my guess is hopefully some common sense will come between now and February, and they won't extend the mask mandate again in January. And I believe at that point, people will start be traveling again. They won't have to worry about it anymore. They'll actually allow you to buy alcohol on the planes again, and everything will be fine in January. So I believe American Airlines will be fine. I'm also getting a lot of marketing material for Royal Caribbean because I like to cruise a lot. So I'm getting a lot of marketing material, and I'm seeing more and more cruises going out. I've written back to whatever I don't know, whoever I talk to at Royal Caribbean, I don't know what they are, and I've written back to them and asked them what their mask policy is. I don't know what their mask policy is. As soon as I find out what it is exactly and what their vaccine policy is, I may or may not go on a cruise, but I probably won't go on a cruise till November, December, January, February, or only because, once again, I want to know what the mask policy is. I want to know what the vaccine policy is. If it's do your own thing, then I'm good on it. Although I really don't want to watch. I really don't want to be on a cruise and and see people with masks. Oh, I just have to put this on a side note, just in case somebody has seen this happen. So again, we teach investor schooling, and last night I'm at the school, and someone has a mask on. Every once in a while, people come in with a mask. They're allowed to be afraid if they want to. And I swear she sneezed in her mask. Not once, but 4 times. I wanted to throw up. But anyway, if you enjoyed the show, I want to thank you for watching Money Chat today. I'm sorry, Money Chat Now? Boy, I can't even remember my own show. Money Chat Now, from time to time, I own some of the assets and options discussed in this show. The opinions discussed in this show is solely mine, and no one has asked me to discuss them. That's for sure. Thank you for watching Money Chat Now. We look forward to your continued support. Please, please, please like, share, comment, and subscribe. See you next week.